Welcome back. You're tuned into Bazaar Morning Call. You're on CNBC-TV18 and hope you're having a good morning. If you're a bull, you'll be happy to look at the screen. Global markets are more or less stable and the SGX Nifty suggesting after a fantastic Friday, maybe we're set for an 80-85 point gap up. But let's talk about a lot of stocks then. Prakash Diwan joins us, this morning market expert. Hi Prakash, good morning. Good to speak to you as always. Prakash, you know the Adani Group stocks, they had a super rally, in Friday's trading session. Now, post this rally, what's your approach to the group? And any stocks you will preferably like? Maybe the cement pack, Adani Ports, they were the notable assets, I think, in the past that you were saying fundamentally looks good. Your view?
Right. Good morning, Nigel, and a happy Monday to you. I think interestingly, what the Friday, news flow, Thursday, Friday news flow did for this entire group of stocks is it kind of almost signified a bottoming out of the negative news flow or sentiment around the stocks. Yeah. So, I mean, there is a likelihood that you would keep on hearing about certain issues related to the credit side of the business or the refinancing ability and stuff like that. But by and large, on the equity side, I think the dust seems to have settled. The storm seems to have been behind us and abated. But the next few triggers are going to be more related to the organic growth of the business, right? So there are some very promising pieces within Adani Enterprises, for example, which is the flagship company, where that's where everything started off with that planned FPO. If you see the airports business or the mining business or maybe the data center business, as news flow around that starts crystallizing, people are in a position to accord value, and on a sum of parts, things start looking kind of promising for some of the long investors. Then you'll probably see that whole sentiment come back in a very positive way. But that might take some time, as it's driven by developments on the business side, more importantly than just news flow around the stock behavior. The second thing that you need to look at from the existing setup, as you rightly said, we've always been talking about that there is value in cement, in the cement twins that they've acquired. As long as the moment you hear about that funding that they need to bring in, which is roughly about 2 billion. Now that pending thing, once it starts seeing some fructification, you'll see a rally in Ambuja and ACC for sure, because they need to catch up with the Ultratechs and the Shrees of the world in terms of at par valuation. The other business, sports, you've seen already how re-rating is happening, given the fact that there is very clear traction on the business. So, you have to be selective, you have to be patient. Don't rush into these stocks just because somebody's bought them, because somebody's bought them with a very different purpose and they already risen 20% from there. So your risk reward needs to kind of get recalibrated. But yeah, things could look very different. So for people who are holding it, it's great news. That's a relief of sorts.
Okay, got that. That's on the Adani Group and a couple of these stocks, Adani Ports, etc. But I wanted your thoughts on some of these new age tech companies. There's a very interesting report that Macquarie has put out on Nykaa this morning, and we'll talk about the report later. But the gist is that they are cautious. They are saying that A, there is a lot of competition coming through, and B, the growth is now moving to smaller towns, so their margins could be at risk. And also now people have started, as far as Nykaa Fashions is concerned, people have started going out and shopping, right? There's physical retail now. So once again, e-commerce retail will suffer. So there's a very cautious report on Nykaa. Do you believe that even if, stocks like these come back because of their return to profitability, some of these names like Nykaa, could still see some threat to their stock price because of competition?
So yeah, good morning. So I think I haven't honestly been able to go through this report that you allude to, but very clearly, you go by the experience of some of these other fashion retailers or beauty retailers that have tried, improvising on this brick and mortar model. I mean, for case in point is the Sephora brand of, chain of outlets, which the Arvind group had actually initiated. I mean, it was a great start. It has great products. Everything is fine. And we've seen how internationally it's so popular and deep in terms of impact. But here, it could make a big dent. The reason is very simple. India is a market which is more of Bharat than India. And you need to be reaching out to those people. So this brick and mortar thing becomes too expensive and too long drawn for somebody to go straight from online to there. So there's going to be a huge transitionary cost and time factor attached to it. And on the profitability part, all of these companies like a Nykaa or a Zomato or a Policy Bazaar and all, while they they're marching ahead to profitability given the very clear message from the market. It's going to be a while before the unit economics justify these. I mean, Nykaa had a look at what the valuation is and look at the profitability. It's just a few lakhs. It's not even like, going into some very significant number on a quarterly run rate. So, Sonia, this is going to be a problem. They will have to get scale up in profit as well, not just in revenue. Whereas, the contraction of the valuations will probably somewhere converge to make risk reward favorable, which is happening in a Zomato, for instance. People have started seeing some sort of hope given the change in the business model. It'll happen in Policy Bazaar at some point in delivery. So, you'll have to wait for that, but don't jump in just as yet.